Dinar shift. The world of international finance is currently focusing its attention sharply on Baghdad, as an announcement of an urgent and high-impact nature has been issued from the heart of Iraq's banking sector. This is not merely a routine fiscal maneuver or a minor technical tweak to the monetary policy, but rather a strategic development that could ultimately prove to be a watershed moment in the nation's ongoing financial evolution. The reverberations from this action are already beginning to spread, creating a palpable sense of movement not only within Iraq's domestic economy, but also across the global currency markets. Understanding the full weight of this moment requires acknowledging the long-term context that has led to this decision, a period characterized by quiet internal reforms and a focused strengthening of the country's economic foundations. The key news event that has commanded this international focus is the official confirmation by banks across Iraq of a newly established updated exchange rate for the Iraqi dinar. This step, which was carefully prepared and executed, has instantly captured the attention of financial institutions, market watchers, and currency enthusiasts worldwide. For a nation whose currency trajectory has been a subject of intense speculation and global interest for a substantial period, this action represents a definitive signal of confidence and intent from the highest levels of the country's monetary authority. It raises the fundamental question for all observers, particularly those who have been tracking Iraq's progress. Is this the tangible breakthrough that has been anticipated? The first undeniable indication of a larger, long-term strategic shift? The immediate aftermath of this announcement has seen a surge in analysis and commentary attempting to decode the Central Bank of Iraq's precise motivations and ultimate goals. The discourse is now moving beyond mere hypothetical debate, shifting instead to examining the practical implications of a concrete policy action. Market analysts are working around the clock to integrate this new rate into their models, recalibrate their projections, and assess what it reveals about the forward-looking strategy of Iraq's financial leadership. Our objective here is to clearly dissect the details of this critical announcement, explore the foundational economic reasons driving this change, and consider the potential ramifications for Iraq's financial future and its standing within the international community. On a precise date in December 2025, the collective banking sector in Iraq released an official, definitive statement confirming the implementation of this new exchange rate for the dinar. This was intentionally framed and presented not as a localized emergency measure to address a short-term problem, but rather as a calibrated strategic recalibration of the currency's value, designed to align it more accurately with the country's strengthening economic reality. Such a significant move, especially one concerning a national currency, naturally drew immediate global scrutiny, placing Iraq firmly at the center of the international financial conversation and sparking widespread dialogue about its unfolding economic narrative. The reaction across global markets was both instantaneous and comprehensive. Electronic trading platforms immediately adjusted their figures to reflect the confirmed change, while financial analysts across major institutions quickly released rapid-fire assessments and projections regarding Iraq's likely next steps in the monetary policy arena. The sheer volume of speculation surrounding the future direction of the dinar surged, reflecting the heightened interest and the widely held belief that this adjustment was a precursor to even more significant structural changes. It served as a clear, unmistakable signal that a period of intense, behind-the-scenes preparation was now transitioning into a phase of active public execution. For many months leading up to this point, the Central Bank of Iraq, CBI, had been meticulously engaged in a comprehensive process of financial and regulatory reform. Today's exchange rate announcement is viewed by numerous experts as the most explicit and clearest public indication yet that the CBI is ready to execute bold, decisive moves aimed at modernizing the nation's financial landscape. This preparation has involved a multi-pronged approach: the sustained strengthening of Iraq's economic base, the disciplined tightening of fiscal policy measures, the methodical boosting of foreign currency reserves to historic high levels, and the successful negotiation of several key international financial agreements crucial for trade and stability. This new currency rate, therefore, is widely interpreted as the culmination of these extensive coordinated efforts, the visible result of months of deep structural work. The core analytical challenge now lies in determining the ultimate scope of this move. Is it merely a pragmatic, calculated response to existing positive market trends intended to stabilize the currency within its current framework? Or, more significantly, does it represent the carefully staged opening act of a much larger, predetermined long-term strategy that is explicitly aimed at a full-scale revaluation of the national currency? What remains unequivocally clear is that this is a departure from the routine, an unmistakable signal that Iraq is entering a new, more ambitious economic era. The central bank is projecting an image of growing confidence, strategic ambition, and an unwavering commitment to transitioning into a more sophisticated and globally integrated financial state. This exchange rate adjustment could very well be the critical spark required to ignite a prolonged series of major financial and economic transformations that will reshape Iraq's standing in the coming years. It signifies a transition from a period of recovery and stabilization to one focused on proactive growth and modernization. Within hours of the official disclosure, the tangible ripple effects began to manifest across both the domestic Iraqi market and the broader international financial ecosystem. Iraqi enterprises, from major corporations to small businesses, responded with swift recalculations of operational costs, immediate renegotiation of existing supply agreements, and the urgent adjustment of their short and long-term financial projections. This quick, pragmatic response demonstrates the high level of anticipation that preceded the announcement, and the necessity for the private sector to rapidly adapt to a new monetary reality that fundamentally impacts profitability and trade logistics. It is important to emphasize that the basis for this new exchange rate did not arise in a vacuum. Rather, it is directly supported by a series of months-long positive economic indicators suggesting that Iraq was systematically preparing for this monetary shift. Domestic inflation, a recurring source of concern for many years, had recently shown signs of easing, indicating effective monetary management and control. Simultaneously, Iraq's foreign reserves had steadily climbed to their highest recorded levels, a crucial benchmark that significantly strengthens the country's financial position and provides a robust foundation for long-term currency stability. Thank you and resilience against external shocks. A stronger, more predictable dinar is a potent tool for Iraq's foreign economic policy, enabling the nation to engage much more efficiently and competitively in international trade. The enhanced value inherently lowers the costs associated with importing essential goods, which can ultimately translate into benefits for Iraqi consumers and businesses through reduced prices. This improved stability and market function naturally serve to increase the dinar's overall attractiveness to international investors, who are now intensely analyzing how the new rate will influence Iraq's purchasing power, its appeal as an investment destination, and the country's overall long-term economic trajectory. The early global signals indicate a marked increase in investor confidence and a more optimistic outlook. International investors and veteran currency watchers are interpreting this development as a significant, potential turning point, a clear opportunity for Iraq to definitively refine its monetary policy and reestablish a more robust international recognition for its national currency. However, it is crucial to note that a certain degree of short-term volatility is anticipated as the market fully absorbs the change. The manner in which Iraq manages this delicate transition will be the ultimate determinant of whether this is a sustainable, enduring success or merely a temporary market fluctuation. This transition naturally brings the conversation back to the topic that has dominated dinar-related discussions for years: the possibility of a revaluation, RV. For over a decade, analysts and currency holders have debated the realistic potential for a major RV that could dramatically elevate the dinar's value. Previously, these discussions were largely theoretical, grounded in Iraq's massive oil wealth, its substantial untapped economic potential, and its significant strategic importance on the global geopolitical stage. Today's confirmed rate adjustment, however, provides the first substantial practical evidence suggesting that those long-term predictions may indeed have been well-founded. A growing number of seasoned financial experts now believe that this calculated adjustment could be deliberately positioned as the initial move in a phased revaluation process. While the Iraqi government has maintained a strictly neutral and informational tone, stopping short of officially labeling this adjustment as part of a formal RV plan, the confluence of strategic timing, supportive economic circumstances, and the gravity of the announcement collectively suggests that a deeper multi-step strategy is highly likely to be unfolding behind the scenes. This structured approach would allow the country to manage the economic impact with greater control. Yet, it remains critically important for all observers to temper any immediate excitement with a strong dose of realism and perspective. Currency revaluations are fundamentally complex operations. They are politically sensitive, require immense regulatory coordination, and absolutely depend on the presence of near-ideal sustained economic conditions. Even if this new rate is the official start of an RV pathway, the full realization of the process is anticipated to take considerable time to complete. Nonetheless, for those who have patiently held the dinar for years, this moment undeniably signifies the commencement of what could be an immensely significant and long-awaited new financial chapter. Beyond the immediate exchange rate policy, Iraq is simultaneously engaged in the monumental task of constructing an entirely modernized, digital-forward financial ecosystem. A central and transformative component of this vision centers on the forthcoming digital dinar. HIC is essentially Iraq's planned central bank digital currency, CBDC. This project is designed not just as a convenience, but as a foundational leap intended to fully modernize Iraq's aging banking system and strategically align it with cutting-edge global digital financial standards. The introduction of a CBDC promises a multitude of benefits for the Iraqi economy and its populace. These advantages include the enablement of faster, more secure payment processing, the significant reduction overall banking system costs, and, critically, the provision of much greater access to formal financial services for the millions of citizens who currently have limited or no access to traditional, physical bank branches. This initiative is a powerful tool for promoting financial inclusion and efficiency across the nation. It is highly plausible that the current confirmed exchange rate adjustment is an integral piece of a broader, more cohesive national strategy designed to underpin and facilitate the future digital infrastructure. By harmonizing the national currency's value and stability, the central bank is likely ensuring a seamless and efficient synchronization of the dinar with global financial technology ecosystems. This forward-thinking integration is essential for a currency that seeks to play a larger role in international trade and commerce in the coming years. Further reinforcing this forward-looking vision, Iraq has been making aggressive, substantial investments in modern financial technology, fintech, implementing advanced payment platforms, and developing sophisticated mobile banking systems. These infrastructure upgrades signal a commitment to moving away from paper-based transactions and toward a fully electronic economy. Additionally, persistent verifiable rumors suggest that new, lower-denomination notes are currently being prepared for circulation. A practical step that would logically make sense in an environment where the national currency is transitioning to a significantly higher intrinsic value. When all these coordinated initiatives, the exchange rate adjustment, the financial reforms, the foreign reserve accumulation, and the digital currency development, are considered holistically, the central bank's strategic vision becomes exceptionally clear. Iraq is not merely attempting to marginally raise the external value of its currency. It is undertaking a complete, root and branch reconstruction of its entire financial system. The aim is to build a robust, resilient, and technologically advanced economic architecture capable of supporting modern global commerce. Of course, with any economic transformation of this magnitude, there will inevitably be significant challenges and periods of uncertainty. Major currency adjustments inherently carry the risk of short-term public concern, potential inflation spikes, and increased speculative volatility. The sustained, long-term success of this transition will heavily depend on Iraq's demonstrated ability to effectively manage inflation, consistently maintain a high level of public and investor confidence, and skillfully navigate the complex web of regional geopolitical pressures that can influence market sentiment and stability. However, the corresponding long-term opportunities that lie ahead are equally profound and substantial. A sustainably stronger dinar has the potential to dramatically improve the daily lives of ordinary Iraqi citizens, significantly reducing the cost of living, increasing domestic purchasing power, and stimulating a new wave of local business growth and investment. Furthermore, this entire coordinated effort sends an unambiguous signal to global partners that Iraq is committed to serious, lasting reform and is ready to step confidently and rely ably into the international economic arena. The central bank has repeatedly and carefully emphasized that this recent exchange rate adjustment is not an impulsive move, but rather a meticulously orchestrated step within a comprehensive, long-term transformation plan. Officials have been keen to reassure both the domestic populace and the international investor community that further changes are planned and that today's action marks only the very beginning of a much broader staged evolution. This narrative of patience and methodical progress is vital for managing expectations and maintaining market confidence. If Iraq is able to maintain the impressive current momentum of its reform agenda, this entire process is set to lay an exceptionally strong foundation for a future economy that is more stable, highly diversified, technologically advanced, and deeply connected to global markets. For those following the dinar's trajectory with close attention, the coming months promise the potential for monumental and historic developments, representing the fruition of years of observation and anticipation. This period may mark an inflection point that observers have long considered inevitable, but which has been repeatedly deferred by periods of instability. Countless international investors who have diligently tracked Iraq's economic evolution for a decade or more are now viewing this moment as a possible historic pivot. Many individuals have held their dinar for years, patiently waiting for a clear, concrete signal of structural change. Now, for what may be the first time in a meaningful way, that long-anticipated moment appears to be actively unfolding through tangible policy actions. The latest exchange rate adjustment is widely interpreted as decisive evidence that Iraq is genuinely prepared to elevate its currency's status and role on the global financial stage. The key question that is now echoing with renewed intensity through investor communities across the globe is straightforward. Is this rate adjustment the definitive start? Could this be the long-awaited launch of a major structured revaluation program that so many have speculated about? Some respected analysts argue persuasively that Iraq is indeed entering the initial phase of a multi-step RV strategy, citing the record foreign reserves, enhanced gold holdings, and the rapid upgrades to the financial infrastructure. However, a prudent and equally respected contingent of financial experts continues to urge caution and patience, correctly noting that Iraq still needs to achieve several crucial international benchmarks. One of the single most important of these is the achievement of full compliance with Article 8 of the International Monetary Fund (IMF) Charter. Attaining this status would allow the dinar to become fully and freely traded on global markets without significant restrictions, a move that would immediately and drastically boost international investor confidence in the currency. With foreign reserves at robust, near-record highs, governance and anti-corruption reforms steadily progressing, and clear, consistent movement toward greater financial transparency and global integration, a broad consensus of analysts believes Iraq is positioning itself for a substantially more stable and globally recognized currency environment. If this consistency and disciplined reform continue, those holding the dinar today may find themselves in an exceptionally favorable position as Iraq approaches what could be one of the most consequential economic transformations in its modern history. The central bank's strategy is undeniably a sweeping reconstruction of its entire monetary and banking architecture, aligning the nation with the digital era and implementing modern global standards. RDS for financial operation. The cornerstone of this profound transformation is the implementation of the aforementioned digital dinar, the nation's version of a central bank digital currency (CBDC). This initiative represents a historical leap forward, fundamentally changing not only the mechanics of how money circulates, but also how the state fundamentally envisions economic inclusion, payment efficiency, and the technological underpinning of its entire financial sector. The design specifications of the digital dinar are focused on delivering transactions that are faster, inherently safer, and more transparent, while simultaneously reducing the economy's heavy reliance on physical cash. It aims to lower operational banking costs, significantly minimize the opportunity for financial fraud, and crucially enhance access to formal financial services for citizens. This last point is profoundly significant in a country where a large segment of the population remains either unbanked or underbanked, and where digital tools represent the most efficient way to bridge entrenched structural gaps and promote widespread economic participation. The recent exchange rate adjustment may very well be a foundational piece of a larger strategy to harmonize the national currency with the future digital infrastructure, ensuring complete technical compatibility with global financial technology ecosystems from the outset. Iraq's aggressive and ongoing investments in complex fintech platforms, advanced real-time settlement systems, mobile banking interfaces, and enhanced electronic auditing capabilities all point toward a strategic convergence of initiatives. The goal is a highly integrated system where the digital and physical components of the economy evolve and operate in perfect synchronicity. When viewed as a unified whole, the trajectory of Iraq's financial policy is unmistakable and determined. The central authorities are not engaging in superficial financial tweaks. They are methodically rebuilding an entire national financial system from the foundational level upward, comprehensively preparing the country for a modern, complex economic era. This disciplined approach underscores a long-term commitment that should resonate with all who observe the region's economic developments. The magnitude of this endeavor is what makes the current developments so compelling and noteworthy for the global community. The success of this comprehensive monetary and economic transformation is heavily reliant on the management of key challenges, most notably the control of inflation and the maintenance of public trust. When any country undertakes a currency framework adjustment, whether through exchange rate recalibration, new digital components, or structural reform, public confidence becomes the single most critical driver of success. Iraq must not only ensure monetary stability but also successfully manage consumer price inflation, prevent excessive speculative volatility, and mitigate the influence of regional pressures. Despite these inherent challenges, the potential for long-term benefit is truly extraordinary. A sustainably stronger and more stable dinar holds the potential to profoundly improve the economic well-being of the average Iraqi citizen, reducing the cost of living and stimulating greater private sector activity. Crucially, this commitment to reform signals to international partners that Iraq is a serious, credible actor in the global economy, willing to embrace transparency and modernization to attract the foreign capital necessary for true economic diversification. The central bank's repeated assurances that these developments are part of a methodical, long-term transformation, rather than a rushed or impulsive decision, are central to the overall strategy. Officials are committed to the narrative that today's shift is merely the opening phase of a broader, sustained evolution. If the current pace and commitment to structural reform are maintained, the coming years promise the emergence of a more stable, technologically advanced, and fully integrated financial system, one capable of supporting advanced commerce and fostering deep economic resilience. For those who have followed the dinar's story for years, the next several months may carry historic significance, potentially marking the clear emergence of a new, economically vibrant chapter. Many veteran international investors who have tracked Iraq's economic evolution for over a decade believe that the country may now have finally reached a critical inflection point, a moment long anticipated. The recent exchange rate adjustments and policy reforms are widely interpreted as the strongest possible signals that Iraq is definitively preparing to elevate the status of its currency on the global stage, making this a pivotal time for all observers. The key question now reverberating through financial and investor communities is straightforward: are we witnessing the beginning of a structured upward revaluation process? Some influential analysts argue that Iraq is indeed entering the early phase of a multi-step RV strategy, citing the verifiable evidence of increased foreign reserves, enhanced gold holdings, and the substantial digital infrastructure upgrades now underway. This school of thought views the current actions as calculated steps towards a long-term goal of currency elevation and international recognition. Conversely, other experts continue to advise a more cautious approach, noting that several crucial international obligations remain to be met before any sweeping revaluation becomes a viable, realistic action. Foremost among these is the achievement of full compliance with Article 8 of the International Monetary Fund's Charter, which is the necessary prerequisite to allow the dinar to be freely and fully traded worldwide without any restrictions. Such a move would be a powerful catalyst, instantly boosting investor confidence and opening the door to greater global participation in Iraq's markets. With record foreign reserves, improving governance, strengthened transparency measures, and steady, measurable progress toward international economic integration, many analysts believe that Iraq is positioning itself for a substantially more stable and globally recognized currency environment. If these fundamental developments continue in a consistent and disciplined manner, dinar holders may find themselves in an exceptionally promising position as Iraq proceeds toward what is clearly becoming one of the most consequential economic transformations in its recent history. The path ahead requires continued focus on stability, reform, and disciplined execution. The most prudent and actionable guidance for all individuals, observers, and currency enthusiasts is to remain comprehensively informed, maintain a clear, long-term perspective, and, above all, exercise strategic patience. Large-scale, foundational economic reforms never unfold in a single sudden moment. Instead, they progress through a logical series of interconnected stages that depend on consistent regulatory updates, successful digital modernization, the meeting of international compliance benchmarks, and sustained political continuity. This understanding is key to navigating the current environment. Iraq's latest rate adjustment must be seen not as a final event, but as one essential component of a multi-layered national strategy aimed at building a more stable, transparent, and technologically advanced financial system. For those who are watching closely, this means actively avoiding impulsive, emotionally driven decisions, rigorously resisting the spread of unverified rumors, and relying instead solely on verified information and the measured insights from credible financial professionals who fully understand the complexities of global currency systems and the specifics of Iraq's reform process. If Iraq successfully completes the rollout of its digital currency, fully implements its modernized monetary policies, and definitively attains Article 8 compliance under the IMF framework, the long-term implications for the dinar could be profoundly meaningful. However, it remains absolutely essential to recognize that all opportunity carries an inherent element of risk. Therefore, conducting due diligence, seeking professional financial guidance, and grounding expectations in verifiable facts rather than pure speculation are critical behaviors for any individual following this story. Whether an observer has held dinar for many years or is simply beginning to study Iraq's dramatic economic shift, the coming months promise to bring developments that will fundamentally shape the country's financial trajectory. The key to successful observation is to stay focused on the core reforms, follow trustworthy, factual updates, and consistently avoid succumbing to emotional hype or market noise. Iraq's path forward is filled with tremendous potential, but that potential will be realized through deliberate, measured steps, not sudden, unpredictable leaps.